America, the key question you have to ask is, why did the Treasury Secretary and Bernanke allow Lehman Brothers to collapse? Because that single decision, if Bernanke and Hank Paulson had listened to my talk yesterday about how to make wise decisions based on hard mind, we wouldn't be talking about balance sheet recession now. They made easily one of the worst decisions in the last 90 years, and they still don't want to admit it. Even though a Chicago law professor has written a very good paper, because Bernanke always said that legally the Federal Reserve cannot do anything. So this law professor, I think his name is Eric Rosen, wrote a paper and said that Bernanke is bullshitting. Legally, he has all the power to rescue Lehman Brothers. So when you have that kind of, because the mindset in Western economies, in capitalist economies, is always too big to fail. And Lehman Brothers was a large institution. So you always assume all the counterparties, people in the financial markets, would assume that Lehman Brothers would be safe, because 6 months before that you saved Bear Stearns. And a few weeks before that you saved AIG and the rest, and Freddie Mac and Fannie Mae. So why wouldn't you save Lehman Brothers? But they didn't. Well, all kinds of theories behind this, which we can have another seminar on that next. Monetary policy seems to play an important role in ending recessions and strengthening recoveries. That is before 2008. That was when the global economic environment was different from post-2008. Post-2008 is basically balance sheet. Before 2008, when you have the 73 recession, the 82 recession, those are usually inventory-created recession. The manufacturers, the corporations have produced too much. They end up with too much inventory. US monetary or central banks increase interest rates, demand drop, you cut your inventory, your production drop, you enter recession. Then when you reverse interest rate tightening, then the thing starts rolling again. But post-2008, it hasn't worked because the recession is a different animal. Right? Next. How can monetary policy be effective when there's no demand for funds? People don't want to borrow, right? And the assumption behind the efficiency of monetary policy is this: you must have borrowers in the private sector who are willing to borrow. So even though interest rates have dropped to very low levels, like in the case of Japan, people don't want to borrow. And monetary policy loses its effectiveness in this type of condition. Next. Which is why you end up with where we are now. Either negative, this is negative, Europe is negative, Japan is negative, or almost zero for the US. The only country that's got healthy, positive interest rate is China. But China is alone. China is about 12 trillion GDP. US is about 17. Euro is about 15, 16. Japan is about 4 to 5 trillion. So China alone cannot offset, in terms of monetary policy, cannot offset the rest of the world. In the case of China, very quickly, it was also in the risk of falling into balance sheet, but the government in China was very fast, very decisive, very fast. The fiscal stimulus that they undertook was equivalent to 17% of GDP, and everything was rolled out within 2 years. In the case of US, it was very slow. The fiscal stimulus amounted to only about 4 to 5% of GDP. And because of the political battles between the Democrats and the Republicans, the effect of it, a lot of it was diluted. And then China was able to fully mobilize its monetary policy. As you may have heard earlier about the Chinese banking structure, right? Where, well, the banking structure is also actually very important part. The large banks are a very important part in an unofficial way of the government, of the economy. So of course, monetary policy is a lot more effective. You don't want the banks to lend, the banks won't lend. You want the banks to lend, the banks will lend. Right? So the Chinese government responded to the global economic crisis that was created by the Lehman Brothers in a very active, fast and aggressive manner. And what I wanted to show is this, that China was able to prevent not just a recession within China, but also to prevent a global depression by being able to launch that massive fiscal stimulus program.